Hey everyone, I'm super excited today because I'm going to be introducing my wheel options tracker. Now this is a really simple spreadsheet designed for Google Sheets that allows me to input my trades and track the process of any trades involving the wheel, which is selling puts, buying stock, and selling covered calls. I know it sounds complicated, but I'm going to break it all down for you today. My name is Levi Woods, this is Drawbridge Finance, and this is an opinion channel only about money. Thank you so much for joining me today. And today we're going to review my spreadsheet that I built specifically to track the selling of the wheel strategy. Now, for people that are unfamiliar with the wheel, it's actually a pretty simple process, and a process that I actually stumbled upon myself when I started to trade options because I came from the background of buying and holding long-term investments. It's a pretty simple strategy that involves the buying of 200 shares. And the process is pretty simple. It starts off by selling a single put, and then if that is assigned, then I end up purchasing shares, selling another put, and selling calls on the shares that I own. Now, once you get familiar with it, it makes a lot of sense. And this spreadsheet was built in a way that it makes logical sense from the start of the trade down. Now, if you're not familiar with the wheel strategy in general, you should subscribe to the channel because I'm going to be going over this process so we can get you up to speed. But today, let's dive into the tracker. Now, the best place to get the tracker is actually over at my website, drawbridgefinance.ca. And when you get here, there's a couple of different ways. You can click on this icon here for spreadsheets. You can scroll down. You can click on the wheel options tracker here, or you can use the menu up above, which goes spreadsheets, options spreadsheets. These are all of the different spreadsheets that I've designed and most of which I use on a regular basis. Now, the one we're covering today is actually called the wheel options tracker. So option selling wheel options tracker. I'm just going to click on this and you'll see that I've designed this for Google Sheets. Now, one of the reasons I designed this for Google Sheets and not for another platform is because of the color coding capabilities. Google Sheets is amazing. We're able to share our files with other people if we wish. The ability to switch platforms between desktop and mobile is amazing, and it's just a super slick program. I like it so much more than Apple Numbers and Microsoft Excel, and I'm not really designing spreadsheets for those platforms anymore, especially because Google Sheets is free and available to anyone. Pretty great. Now, once you've made your purchase, you're going to get a nice little download that looks like this, and it's going to thank you for purchasing the options tracker, and it's going to prompt you to make your own copy. This is very important. So you click on make a copy, and what this does is it saves a copy to your Google Drive, and that's where the file is going to live so that you can access it wherever you are. The name of the file is right up here, and it's easy to rename it however we like. Now, one of the nice things about the spreadsheets that I design is that I leave them completely customizable to you. So it's important that you don't mess up the functions. For that reason, I've got a couple of different locked files down at the bottom. There's 3 different tabs. There's an instructions tab, a wheel strategy blank, and an Apple sample. And what those do is they allow us to actually take a look at some specifics about how the spreadsheet functions, and we can also see a pre-filled out formula one. This was the Apple trade that I did last year, and these are all real transactions and actually how I filled it out. So if there's any questions, this sample can help you out a ton. It also shows this summary, and it shows you the potential profits of a trade like this when done simply over time. Because the spreadsheet can be altered in different ways, I have these locked. To start a blank one, we just right click and say duplicate. And then it's going to make a copy, and we can rename that whatever we like. In this case, I'm just going to rename it AAL, which happens to be American Airlines. The reason I would do something like that is because maybe I want to start the wheel strategy on American Airlines. My spreadsheets are designed in a way that are pretty simple. You usually just fill them out line by line using the white cells. We'll look up here in cell O1, and I'm going to type in AAL, and it's showing the current stock price of $16.57. Now, in general, if I was going to start the wheel strategy and I was going to do it on a $1,600 stock, I would want enough money to buy 200 shares. So in this case, I'm going to start with a deposit of $3,400, which is going to cover the cost of buying at least 200 shares at today's market price. I'm going to go up here to cell B3, and I'm going to pop in the date. Now, it's immediately telling me that there's errors. You can see these red boxes kind of all over the screen are showing me that there are some partial entries and that something needs to be rectified. I have these pre-filled out formats, And the first thing we're going to do to start a wheel strategy trade is deposit cash. Now, this is not actually a cash transfer in my account. It's just an amount of cash that I am allocating towards this trade. And the transaction price is going to be $3,400. Now it's showing me that this is a credit, and I have a credit in this particular trade of $3,400. And then my account cash balance, or the amount allocated towards this trade, is $3,400. And that's as simple as it is. Now, what I would normally do is I would sell a put in this case. So I might do this on the same day, February 3rd. I'm going to sell to open a put. And as soon as I do that, it's going to pop up with all of these different features. I might decide to go a month out and sell the March 4th contract, and I'm going to agree to buy AAL at a price of $14. So that'll be the put strike that I have chosen. Now I'm going to check this box because it's currently open, and I'm going to sell one of those. And the price that I'm receiving today, or the premium that I'm receiving, is going to be dependent on what you actually receive, but we enter this 20 cents. The commission paid, this is again from your broker side, and typically my fees are around 65 cents, but in some places in the world, there's no fees at all, so this would just be a zero in commission paid. Now it also shows that this is a partial entry, and the reason for that is because if you've got this open, if it's a currently open position, then it needs to have a current price. So it's the current option price to close. Even though I just opened it for 20 cents, what I collected, if I wanted to close it, it would also cost me 20 cents. So I'm going to fill in 20 cents. These are all entered in positive numbers. Because I've entered this sell to open put, it automatically knows that this is going to be a credit. This is a transactional credit, and the total credit is $19. Now, the way that it can figure that out, the spreadsheet calculates this by taking the 20 cents, multiplying it by the number of contracts, and subtracting the commission paid. This is the total commission paid. This is the number of contracts. If I did 2 contracts, then obviously it's 20 times 2, which would be $40 minus the 65-cent commission. That's where we get $39.35. Let's just take a moment over here at the detail sheet. Because I have this checkbox on that's currently open, it is also appearing down here in this summary where we can see any of the open positions. I have changed this to 2 quantities, so you can see that the cash allocated is $2,800. Now that was something I was showing as an example, so I'm going to go back over here and I'm going to change this back to 1 lot because that's a typical way to start the wheel strategy. You're going to see that it immediately allocates this $1,400. And what that's doing is it's saying from the $3,400, we've allocated $1,400 towards the buying of stock, and the current cash balance is $3,419.35 because of the credit that I received when I sold the put. And there's unallocated cash of $2,019, which is pretty great. The net liquidation value, if I was to sell this right now and to cash out the trade, would be minus the 65 cents that I paid in commission fees. That's why this balance is different from $3,400 to $3,399. So I have an unrealized net loss of 65 cents if I was to open and then immediately close. As time goes by, if the stock doesn't drop below the $14 threshold, this is going to expire. The beautiful thing about this spreadsheet is that I don't actually have to do an entry to say that the option expired worthless. I just have to uncheck it. So I come over here and I uncheck the checkbox. It immediately shows that there's a partial entry, and the reason is because I've got this unchecked and I've still filled out information that has the current option price to close. Obviously, if it expired worthless, then there was no cost to close. So I'm just going to click on this cell and hit delete. So now I have my first entry fully finished. I deposited my cash of $3,400. I sold to open a put on that was going to expire March 4th, and it expired worthless. And I can look over here at the summary. This is automatically set up to count the number of days that I was in a trade. If we look over at my Apple sample, you can see that I was in the days in trade were 360. It was counting from the date of the first entry, January 19th of last year, down to the last entry, which was January 14th. And now quite simply, we would do the next phase of the wheel, which would be to sell a replacement put. So on March 7th, on Monday morning, after the expiration, I would do the same thing. I would sell to open a put, and I would pick the next week out, March 11th, and I would pick the same strike price, 14, click the checkbox to open. I would sell one, I would collect 20 cents and pay a commission of 65 cents. And again, similarly, it's a partial entry until I put in the current price. And this could be updated over time. If I was checking this and the price had increased or decreased, I would be able to enter whatever price I want into this, always as a positive number because it calculates it out as a negative or as a cost to close. So in this case, we're going to put this back at 20 cents and we're going to record this as if the stock was assigned. If the stock had dropped below the $1,400 threshold and I was forced to buy stocks for $14 a piece. The first thing I would do is I would come up here and I would uncheck the closed trade, and I would then delete this current price to close because it's obviously closed. There is no more price to close. And I would fill in the date that I actually purchased the shares, which in this case was March 11th, because that was the day that the contract ended and it was the day that the stock was assigned. And then I can just choose in here what the action was. I bought stock. How many did I buy? I was assigned 100, so I bought 100. I paid $14 each for them, and there was zero commission fee. And it immediately calculates that this was a debit, and it puts a debit into the debit column. It shows that my total cash balance is now only $2,038.70 because I started with $3,400, I got 2 credits, and then I paid a debit of $1,400. It also calculates a running total as to what the value is right now. So even if I had paid $1,400 at this time, but the stock is trading today at $16.57, it's able to calculate out the share price. So it's saying that the American Airlines share price is currently $16.57. I currently own 100 of them because I bought them, and the current position value is $16.57, and I have an unrealized stock profit of $257. So it's keeping a running total. It's also keeping a running total of the total opening credits that I've received and any closing debits I've paid to get out. Now immediately, because I've now purchased stock, I can now do 2 things. I can both sell a put and sell a call against the shares that I currently own. Sell to open a put. We're going to say this time we got a little bit less money for it. We got 19 cents. Now we're also going to sell and open a call on that same day because we have shares that we can sell that against. In this case, I'm going to do it for March 18th, same as above, and I'm going to agree to sell the shares for $17. So that's the strike price I'm going to choose. And for that, I'm going to do 1 quantity. Now the transactional price, I'm going to get 15 cents for that. And we're going to the current price to close is 15 cents. Now I've got 2 open contracts. And it shows them both here. I've got a sell to open a put, and it's telling me that I have $1,400 cash allocated, and I've got a sell to open a call. Now there's a couple of checks in this, which is really helpful. So for example, if I put a strike price in that's too high here, say I put in $25, it will automatically give me an error over in this summary saying that I have the unallocated cash is negative. I either need to, the $3,400 that I allocated towards this trade is not high enough and I need to deposit more cash or correct any partial entries if there are any in my spreadsheet. If the stock stays in range at the end of this, it's very simple to record. Both of these are going to expire worthless. And we're just going to uncheck both of those, delete these, and then continue on from there. So on March 21st, I would then sell to open a put, sell to open a call. And you can see how easy this is. I would just repeat as I go along, doing the same or similar transactions each time as my account grows. And we can just continue along as we go. Now there's a couple of other really slick things that I like. One of the things I like to do with my wheel strategy is actually to buy a couple of extra shares with my covered call income. So if I'm selling this and collecting this money, I've got this little bit of extra cash, I can just buy a couple of shares. So on March 21st, I might just decide to buy a stock or 2, and I do that. Maybe I just buy 2 stock and I pay $16.57 each for them, and I pay this 99-cent commission. So it shows me a small debit, and it continues to track. It shows me that I currently have 102 shares, and then my current share position is worth $16.90. Now, the thing about this sheet is that it does need to be kind of finalized to wrap it all up and give you a proper summary. And to do that, all of the positions have to be closed. So we would have to let these expire or purchase them, buy to purchase. So I'll show you a buy to purchase. We would delete the value, and we would click on close because it's no longer open, and we would put in an entry, say March 24th, we decide to buy to close the put. The put we're going to be closing is this March 25th 14 put. So we're going to put in March 25th 14, and it's obviously closed. How many of them are we closing? We're closing one. And what's the debit? Maybe we pay 3 cents to close and a commission of 65 cents. And we just uncheck this, and those two transactions, sell to open the put and buy to close the same put, are the transactions that finalize this. We would do that. In this example, maybe the stock ran up really high and it was trading at $18 a share and the shares were called away from me. Well, in this case, that call that I have open is going to expire, but it's going to expire with the result that I am selling shares back, and I'm selling them for $17 a share. So let me put in that entry. I'm going to say on March 25th, I'm going to sell stock, and I'm going to, this is going to be 100, and I'm going to sell them for a total price of $17 each, and I'm going to pay a commission of 65 cents. Now, because this sell stock has closed out this transaction, we're now going to uncheck this, and therefore all of the transactions have now been closed. I have a share quantity of 2 left. So if I want to really finalize this, I also have to sell those shares. So let me do an entry for that. We're going to go 325. We're going to go sell stock. And we're going to sell 2 of them, and we're going to sell them at the market price. And we'll just say the market price that day was $18.50, and we paid 65 cents to close that. Now the current share balance is 0. This is really important. And we have no currently open options. All of these are unchecked. When those attributes have been met, we can now finalize the trade just by doing a withdrawal or unallocating that cash. So we can say March 25th, we want to finalize this, and we're just going to put in withdraw cash and put in the balance, $3,801.02. And we can see that that's the net liquidation value as well as the account balance. And because there's no shares, this is all just cash. So put in that total, negative 3801.02. I entered this as a negative, and the sheet is telling me that I did that incorrectly. It doesn't want a negative number. It has to be a positive number. It immediately turns the whole sheet green. It shows that the transaction has been closed, and it gives us the total profit. It tells us we were in the trade for 50 days, that the realized net profit was $401. We realized a daily gain of $8.02 or 11%, which gives us an annual non-compounding return on capital of 86% annually, which is pretty amazing. And this is the beauty of this type of strategy. It's very simple. We're simply buying stock, selling puts, and selling covered calls. And if that's a strategy that you're employing and you need a spreadsheet that does this kind of functionality and makes it really clean and simple for the tracking or the bookkeeping aspect of it, then maybe this sheet is for you. If this video was helpful to you, remember it helps my channel a ton if you give me a thumbs up. Even better, you hit that subscribe button so we can all get rich together. Thanks so much for watching, and see you very soon.